The next section of the course will teach you about the different types of loans. We'll be discussing permanent loans, which most people think of when they think of mortgages. In the residential market, permanent loans are the order of the day. In the commercial market, they're actually quite rare to have a permanent bank loan with nobody else involved. That's usually only going to be your prime clients, prime properties, and low LTVs. Most of your permanent loans are going to be through government agencies. We're also going to talk about bridge loans. Bridge loans are our most popular type of loan. They are the easiest to get. LTVs are fairly low at 65 to 75%, but qualifying is much easier. If you have credit dings, they're not going to hurt you so much. Also, you don't have to worry about the income from the property. And bridge loans also have a variety of uses. So we can use a bridge loan for fix and flip, we can use it for minor construction, even minor to major renovation. So bridge loans are very flexible, and they're also the fastest loans for us to do, taking anywhere from 2 weeks to 4 weeks, start to finish, from once we have all the paperwork. We'll talk about residential 1 to 4 unit. We don't do a lot of these, but we can do them as long as they're for investment and they're owned by an entity. Okay, so they will qualify as a commercial, not a residential loan. However, keep in mind that commercial loans are not always competitive with residential. So it may be that you won't compete in this market except for larger or more expensive properties. We'll also talk about construction loans and a little bit about development loans and syndication. We'll touch more on that kind of topic both on the website and in our weekly trainings, maybe not so much here because that's more of an advanced item than introductory, which is what this course isn't meant to be. We also will be talking about agency loans. Fannie Mae and Freddie Mac, if you've been doing residential loans, you're familiar with the agencies. They are kind of the go-to for mid to large multifamily properties because they don't really have an upper limit on financing. And so we see a lot of properties, student housing, senior housing, even regular multifamily in the $20 million range. Those deals are everyday deals to go ahead and put through Fannie Mae and Freddie Mac. SBA loans, we're going to focus on 7A and 504. Those are the primary programs when people are buying commercial real estate for owner occupation. We also have equipment loans, microloans, and cap loans available through SBA. That is covered mostly on the website. We usually do those as subsidiary packages for our clients to make them available because there's not a whole lot of money there, to be honest. And then also we talk about USDA loans. And you may not be familiar with USDA loans. Some of the residential brokers that are maybe in the Midwest are familiar. But if you're in one of the more populous states, you won't have a whole lot of experience with USDA loans. But you'd be surprised at some areas that USDA does cover. And the USDA loan rates and terms and speed of service are often better than SBA. So always take a look and see if a property you're looking at for an SBA loan might qualify for USDA and be an easier course for your client. Anyway, enjoy this section, and I'll see you on the other side.